China is spending billions of dollars in secret development spending, twice as much as the US and other major powers combined. American researchers from Aid Data found that most of this lending is coming in the form of risky, high-interest loans from Chinese state banks. And the figures are startling. 13,500 infrastructure projects worth $843 billion across 165 countries. Now, much of this money is linked to President Xi's ambitious Belt and Road strategy. Here's Celia Hatton.
A 150-page report full of hidden data that took U.S. researchers 4 years to uncover. It's full of hidden information that the Chinese government doesn't even have about its own lending. Namely, that China is bankrolling international infrastructure projects, big things like bridges and ports, at twice the rate of the United States and other major powers. And the majority of that funding is being channeled through Chinese state banks. They're often issuing risky, high-interest loans. $843 billion worth of funding spread across 165 countries. Here's a prime example. A 400-kilometer railway stretching from Kunming in southwest China across the border into neighboring Laos down to its capital, Vientiane. It's a complicated project requiring 75 tunnels and 62 bridges, and it's costing a lot, $5.9 billion. Laos is one of the poorest countries in the region, and it's shouldering most of the risk. Last year, Laos had to sell off a $600 million chunk of its energy grid to pay its Chinese creditors, all before the railway even starts operations. Loans like the Laos deal are often cloaked in confidentiality clauses, so researchers are concerned that the shaky financing behind such deals are often hidden from public view, even though ultimately it's the public that's going to be on the hook for repaying the mammoth debts to China owed by such mammoth projects.
Well, Aid Data's executive director, Dr. Brad Parks, told us why he believes China's lending this money is so concerning.
The levels of debt accumulation over time are staggering. We found that 42 countries around the globe now have levels of public debt exposure to China in excess of 10% of GDP. And as Celia mentioned, a lot of the public debt is hidden from public view. So the Belt and Road Initiative has really created major debt sustainability challenges for poor countries. Beijing really has a buyer's remorse problem on its hands. Many foreign leaders who were initially eager to jump on the Belt and Road bandwagon are now suspending or canceling Chinese infrastructure projects because of debt sustainability concerns and because changes in public opinion are making it difficult for these leaders to maintain close relations with Beijing. I think the jury's still out on whether buyer's remorse among borrower countries will undermine the long-run sustainability of Belt and Road. But clearly, Beijing needs to watch its flank because there will soon be greater choice in the infrastructure financing market, which could lead to some high-profile defections from the Belt and Road Initiative. The US, the UK, and the other members of the G7 are now positioning the Belt and Road Initiative as the low-quality infrastructure option and their own Build Back Better World initiative as an alternative, higher-quality option for countries that want to undertake infrastructure projects based on transparent and sustainable financing.